Hello everyone. This is the pre-market report video for today, June 1st in the Indian stock market in terms of Nifty and Bank Nifty. After 4 days, yesterday Nifty closed significantly negative and the market was mainly dragged by the index heavyweight Reliance and most of the financial stocks. It almost lost 100 points and all those 100 points comes from 5 stocks: Reliance, HDFC Twins, Axis Bank and SBI. Out of Nifty 50 stocks, 29 were declined and 21 were advanced. So the index advanced decline ratio was approximately 0.7:1, whereas the overall market is slightly better than this. It's 0.9:1. Still more number of stocks were declined yesterday than that of the advance. In the last pre-market video, I said the trade volume was 6-month high. Yesterday, it was even higher by multiple times. If required, please pause it and have a look. Normally, FII trades for 7,000 to 8,000 crore rupees. Both, they purchase for 7 to 8,000 crore rupees and roughly they sell for the same amount. Now, yesterday they purchased for over 65,000 crore rupees and they sold for approximately 61,600 crore rupees. Thus, FII net bought for 3,400 crore rupees. Similarly, DII usually trade for 5 to 6,000 crore rupees, but yesterday they purchased for 11,720 crore rupees and DII sold for 14,250 crore rupees. Thus, they were net sellers yesterday and net sold for 2,530 crore rupees. Here, you might wonder why. The reason is MSCI rejig. I hope most of you know this MSCI Emerging Index. Like Nifty, it's an index managed by the Morgan Stanley Capital International for including Indian stocks. Actually, they didn't release any official report that which they changed and what. Rather than, there is a private investment firm called Nuvama. They released it around 3 p.m. Indian Standard Time, and that's the reason yesterday there was some crazy volatility in the last half hour. Anyway, about that in detail, we'll discuss in the later part of the video. Moving to US market, last night, Bureau of Labor Statistics released the number of available job openings in US on April month. In the last 2 months, for March and February, the data comes as less than 10 million jobs, around 9.5 to 9.7 million, which market cheered it up so it can prevent the Fed from increasing the further interest rate hike. Now, last night, US job openings unexpectedly increased again to over 10 million openings in April, which is showing the persistent strength in the US labor market. According to investing.com, this is the huge shock now. Thus, it made the Fed monitoring tool to near 70% chance of a 25 basis point increase at the Fed's June 14 meeting compared to a little more than 60% chance a day earlier. However, in the interview, Philadelphia Federal Reserve President and the Fed Governor Philip Jefferson both said that the central bank could pause the rate hikes at the next month's meeting. Still, Jefferson warned that a pause wouldn't imply that the Fed's rate hike cycle has come to an end and it's temporary. They might increase in the future based upon the upcoming inflation numbers. This is a little comforting news. Moving on, energy stocks continued its slide as oil prices fell further below over 2%. At the time of this video, WTI crude oil was trading near $67.5 per barrel and Brent crude oil was trading around $72 per barrel. In case of US banking stock, its index dropped 2.7% as the Federal Deposit Insurance Corporation said that all US banks had a total deposits decline by a record 2.5% in the first quarter. All these made all 3 major index to close negative. At the end of the day, last night, Dow Jones down by 0.41%, S&P 500 decreased by 0.61% and the Nasdaq was down by 0.63%. VIX increased 2.75% and moved near 18, back to the Monday close. Then, regarding debt ceiling, it expects to pass through the Congress at around 7 to 7:30 am Indian Standard Time today. Here, please note, since I'm making the video before that, so I'm not including the impact. For some reason, if the debt ceiling proposal didn't pass through the US Congress, then it will be catastrophic. If it passes through, I'm guessing market already factored that, or it might become positive if US future market turns positive means. In terms of Indian ADR, both the IT stocks closed positive, whereas banks mixed. ICICI Bank marginally increased and HDFC Bank decreased over 0.5%. In case of SGX Nifty, at 3 am Indian Standard Time, it closed at 18,595 for the moment, which is indicating a further 40 to 50 points gap down opening. So this is what happened on the global market. Now let's move to the India specific info. Yesterday in the aftermarket hours, various Indian government department released the various very important country level macros. First, Ministry of Statistics released the GDP data. On Q4, between Jan to March quarter, Indian economy grown at 6.1% against the analyst expectation of below 5%. Whereas, if we take the whole year, in FY 2023, Indian economy grown at 7.2% against most analysts expecting it around just 6.5%. Thus, now India retained its fastest growing major economic tag. In comparison, last year, China grown by just 3%. Then, Office of Comptroller General released the fiscal deficit data, and indeed, Indian government met its guidance 6.4%. Now, the challenge will be this year's target, which is 5.9%, and already in April, Indian government spent 10% more than that it actually planned. And finally, Commerce Ministry released the Indian infrastructure output. The data comes as for April, it grown just 3.6%, which was 1% less than the forecast, which is not good for infrastructure companies. Second info, as I said earlier, like to highlight the MSCI rejig. So now, as per Nuvama report, Kotak Mahindra Bank's weightage in MSCI index will be going to become double from 1.38% to 2.68%. Thus, Kotak Bank will get the additional fund allocation of over 7,000 crore rupees. This is huge positive for that stock. On the contrary, Adani Transmission, Adani Total Gas and Indus Tower would be removed as of yesterday. Thus, there will be an outflow of around 4,000 crore rupees from those stocks. And those stocks will be replaced by Max Healthcare, Hindustan Aeronautics and Sona BLW Precision. Thus, this will be positive for those stocks. Anyway, as per the report, Reliance Industries, ICICI Bank, Infosys, HUL and Airtel are expected to decrease their weightage. Maruti Suzuki, Indigo, Zomato and Cipla expects to increase their weightage. I hope you guys able to follow me. In the other news, today and tomorrow, Indian government will be selling 1.5% of Coal India stock at 225 rupees per share, near 7% discount to yesterday's closing 241 rupees per share. They also said that if it's oversubscribed, then they are reserved to sell additional 1.5%. Personally, I think this is not good since suddenly it will increase the float, but let's see how the market react to this. As a summary, the global momentum is not good. It might get better after the debt ceiling pass in Congress, but for now it's negative. Similarly, SGX Nifty indicating the 40 to 50 points gap down opening. However, IT ADR closed positive, but still Reliance GDR down by additional 1.5%. And also we might see this MSCI rejig impact since majority of the rejig adjustment will be done based on the closing price. Then about the things to look out. First, early morning, this debt ceiling status in Congress. Then, Chinese cakes in manufacturing PMI data for May month. And during our market hours, India's manufacturing PMI is due for May month. The expectation is 56.5%. Then, between 11:30 to 2:30, Europe's consumer inflation, Germany's retail sales data, UK, France and Italian manufacturing PMI, and Europe unemployment are scheduled to release. And in the night, for US, ISM manufacturing PMI and ADP non-farm employment change for May month. Finally, usual weekly jobless insurance claims and crude oil inventories. So these are some of the important items we need to look out for today. Coming to technical, yesterday Nifty opened gap down and it pushed below 18,500, but buyers were back as buy on dip but not enough to recover. Thus, it forms the short bearish candle with a long lower shadow. Yesterday it traded with a negative bias for most of the session. Technically, this can be a reversal formation which is largely negative. However, after an intraday sell-off, it bounced back. So, as long as Nifty holds 18,480, the positive sentiment is likely to continue and it could move up till 18,600 to 18,650. On the flip side, a fresh sell-off is likely if it moved below 18,480 and Nifty could slip till 18,400 to 18,375. But please note 18,460 to 18,400 is the crucial support zone, so it can make that as the base level like how it formed in the last week 18,000 to 18,400. On the positive side, now the hourly momentum indicator has reached the equilibrium line, indicating that the consolidation might mature and it can start a new cycle on the upside. However, still some indicators are indicating Nifty is in the overbought zone. Just for info, on the monthly charts, there was a bullish candlestick pattern formation for the second consecutive month, consistently making higher highs and higher lows formation, which is a positive sign. And in case of Bank Nifty, it too forms the exactly similar candle like Nifty for the second consecutive day. It shows that Bank Nifty is the one that driving the Nifty. I mean, there was a selling pressure in the first half. However, buying was witnessed in the last hour. So it's kind of caught in the middle. At 43,500, buyers are showing interest and the potential for a bounce back. On the other hand, around 44,500, sellers are entering into the market. So let's wait and see. Moving on, based on option change in open interest, some number of put options were unwound at between 18,600 to 18,800. Significant number of nearby call options were added between 18,500 to 18,600. The maximum new nearby call option added at 18,600. So 18,600 is the immediate resistance to break. Then from overall options open interest data, 18,500 got the maximum put options followed by 18,300. Since 18,500 is the short straddle, thus 18,300 is the support to look out and 18,700 is the strong resistance. Then coming to Bank Nifty, based on overall options open interest data, huge short straddle is at 44,000. Then the next nearby maximum call option open interest is present at 44,500. So 44,500 is the resistance to break. Regarding put option open interest, 43,500 is the next nearby maximum put options. Thus 43,500 is the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.